Hello and welcome to our channel. My name is Evelyn, and today we are going to talk about small business taxes. And if you have a question to know what you need to pay in form of taxes, so you've come to the right place. So you might have a question like, what do small businesses pay in form of taxes in the United Kingdom? Actually, there are a number of taxes that you must pay as a small business in the UK, and each of these taxes have its own percentage and the date when it's required to be paid. Missing your tax deadline can result in significant fines and penalties, including interest being added the longer you wait to pay. So understanding when it is due is really necessary to pay the right amount, and also this is vital to stay on top of your business finances so that you don't incur any tax penalties. The number one, the biggest type of tax that you must be aware of as a small business in the UK is called corporation tax. If you run a limited company, you are required to pay corporation tax, and this is calculated as a percentage of your overall profit or taxable income once expenses such as allowances, tax reliefs, salaries, and wages have been deducted. Corporation tax affects limited companies, overseas companies operating in the UK, clubs, cooperatives, and associations. So, what are capital allowances? You might have a question like, what do you mean by capital allowances? So, capital allowances refers to a type of relief that you can claim against equipment, machinery, and vehicles purchased for the purpose of business use, including fleet vehicles and company cars. This can also refer to money spent on renovating your premises in disadvantaged areas of the UK, mineral extraction, research and development, and patent rights. Though you must claim for capital allowances through a tax return, as this is not added automatically. However, there is no fixed term on when you can claim for capital allowances. Number two is called income tax, and income tax is applied on personal income. And the majority of people will pay their income tax through the payee system, which is pay as you earn, and this is automatically deducted from your salary or wages. Also includes your national insurance contributions. For sole traders, you will pay income tax once your profit threshold exceeds the current free tax allowance of £12,570. However, you may also claim a tax-free allowance on your first £1,000 you earn as a sole trader. Also, this is also known as a trading allowance. There is a similar relief available also for the landlords. So, as a director of the company or small business, you will pay income tax on the salary you receive from your business in accordance with your rate of current tax band. Number three is tax on dividends. As a shareholder of a company, you may pay yourself dividends up to £1,000 tax-free, with any amount above this being subject to dividend tax. Dividends are defined as rewards that a company may offer to their shareholders, such as a cash payment or stock. And dividend tax depends on the amount on the individual tax band. So for 2023-2024, the tax bands are at The basic rate is at 8.75% for incomes between 100 and between 12,570 pounds and 50,000 to 50,270 pounds. That's the basic rate, and the higher rate is at 33.75% for incomes between 570 for incomes between 50,271 to 150,000. I guess that is right. And also the additional rate is at 39.35% for incomes above 151,000 pounds. So the next type of tax is called VAT, or value added tax. This is the type of tax which is applied to most products and services within the United Kingdom, although there are some exemptions. VAT is generally set as 20% on the total price of the product or service, and is usually applied and paid by the customer at the point of purchase. You are required to register for VAT if your business turnover exceeds 85,000 pounds annually, or you can actually register voluntarily if you don't reach this threshold as well. You will be required to pay VAT collected to your sales minus any VAT incurred on your business expenses to HMRC, and this is typically done on a quarterly basis. The last one is business rates. This type of rate applies to businesses that operate outside of normal domestic property. Such as shops, offices, pubs, warehouses, factories, holiday rental homes, and guest homes. This type of tax may also apply if you use part of your building for business from a designated area of your home. But there is specific rules related to this, which do not include simply using an area of your home as a business. So those are the type of taxes that you must be aware of. If you have any comments, any additions, please put them in the comment section. And if you find this video useful, please like and share our video to your colleagues or your friends who might benefit as well, and subscribe to our channel, and so that you don't miss out on the next video we'll upload. So thank you very much, and we look forward to seeing you again very soon. Take care.